What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the futures, break down what the charts are telling us, what's going on with the markets, and also why we had a very unusual day today. Now, CPI came out. It was actually as expected, maybe a little bit higher than expected. And typically, when we see CPI a little bit higher, the market tends to react a little bit more negatively. And also, we had a lot of Fed speakers that were very hawkish in a lot of ways. Many of them are talking about how the Fed is going to continue to raise rates. And despite all of that, the stock market still managed to actually have a pretty flat day. We pushed up hard, we came back down, then we had a recovery, and we barely closed red, 0.04% in the red. We were almost green today. So, very unusual price action. I'm going to break down what's going on. But before I do that, let me mention a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo and deposit $100 into the account, you're guaranteed 5 free stocks plus free level 2 data with amazing charting tools. The offer ends in just one day. It actually ends today, so make sure you guys check it out before they run out. With that out of the way, let's get on with the video. So on SPY, I just wanted to note the fact that on the 1 hour time frame, we do have this bullish MACD that actually did end up forming, but overall, we had a very volatile day today. CPI came out once again. SPY got this big push up. It gapped down. It got a big push up. This was manipulation right here. This was a trap. It trapped a lot of people going long. Then all of a sudden we got a smack down to 408. Maybe a lot of people started shorting down here thinking the market was going to crash. Then we came right back up. Pretty insane stuff. Closing flat. We were just barely a tiny bit red. That is manipulation at its finest. I did warn everyone about this, and now I want to break down the future. The first thing I want to note is there are lots of puts for Friday. 3 million are out of the money. Some institutions are going to fight to get them in the money, but at the same time, the market makers are going to try to keep the market up because of these ratios. They're going to try to hold the market up. They don't want to end up paying out the premium. They don't want to lose the money. So what else is worth noting is when we look at the data, you could see that CPI was 6.4%. The expectation was 6.2%. It was a little high. Core was at 5.6%. Once again, a little bit higher than the consensus. And right here, month over month, core and CPI were actually as expected. And we also had some very hawkish Fed speakers like Logan, Harker, Harkin, Williams. They were quite hawkish. Now, despite the new calculations and the new way of calculating it, we still saw CPI come up overall for the month compared to December. So right here we could see all items, it actually went up. Energy made a big part of it, so did utility. And then core CPI also saw a slight increase. Here's the charts right next to each other. You guys can see we have the first increase in quite a while after, win after win after win for the bulls from CPIs since October. We finally got a high report. And the last thing I'm going to talk about is this right here. I think I just mentioned this. Basically, core CPI was also a little bit high. Market typically would have had a negative reaction. This market is different because of manipulation and also because of the excessive amount of puts out there. Now, could you argue that we're forming a rising wedge-like formation? I mean, it is possible. You could argue that this is resembling it now that I look at this. But at the same time, I mean, even if we are going to see a slight pullback because of this, it isn't looking that bad right now. It doesn't look that horrible. Right now, the market's just trading kind of sideways and is chopping around. I do believe the market's going to continue to range trade. I don't really think this is going to just break to the upside super hard after a report like that and after the Fed being this hawkish. But I also don't think that the market's going to just crash out of nowhere. I do believe a pullback is overdue. But before the pullback comes, the market might trade a little sideways first, unfortunately, just like this. And this is because there are going to be people trying to push the market down, and the market makers are going to continue to manipulate the markets. But at the same time, there are the bears out there trying to push the market down, whereas the market makers are going to try to push the markets up, hold the markets in their place, right? It's a very tricky market. We could see this like rising wedge play out on SPY, then the market might come down. If this thing comes down, watch 410 to 408. If we go up, there's 416. My guess would be we continue to push up a bit. We try to get back to like 415 by the morning. Then we might see this thing end up breaking down and getting back to about 412. If we break below it, we might come down to about 410, maybe get another bounce off 408, but we could try to bounce off 410. It's got to be one of these in this area. And I'm just seeing some very sideways action for the time being because of the options chain. I don't see us crashing very hard as of right now. I don't really see us exploding to the upside. We're just going back and forth and back and forth. It's kind of boring at the same time. Just look at us over the last week and a half. We're just back and forth and back and forth. We're likely going to see the same thing here. For Aapl, it's no different. Aapl actually is just going back and forth between support and resistance. It might try to push to 154. It might get a rejection, come down to 152. If it breaks below that, as long as we hold 150, it's likely going to continue to range trade. But if we break below 150, there is that gap that's way down there. As of right now, it just looks like we're going back and forth. There's not a whole lot happening. Microsoft got a nice push, but there's this resistance right over here. I do believe it's going to continue to just chop back and forth. But if it breaks below 270, then you have to watch 267. If it breaks below that, there's this gap fill to the downside. For Neo, once again, lots of sideways action. It actually closed exactly 0.00% for the day again. A repeat of yesterday. It's just bouncing between 10 and about 10.5. Triple Q, it actually did a little bit better than I expected because of, I think, Tesla and some of the other companies like Microsoft continuing to push. I'm seeing the triple Q. We could get a rejection off 307. If we do get a rejection off of it, I'm going to be watching 305. If we break below that, then there's 300. We're likely going to just continue to shop back and forth. But I am seeing some potential in Tesla to maybe try to push this thing a little bit higher. So this 308, maybe up to 310 zone is where we're going to see some resistance. I think we're going to visit that in the morning tomorrow. Then we're going to come down, just trade sideways, maybe see a slight red day on the QQQ. Once again, very boring. Tesla is outperforming the market finally again. This thing looks pretty strong. It actually did end up playing out. This inverse head and shoulders is starting to play out. I did mention this as a possibility yesterday. This thing looks like it might try to get back to 214. It might try it. We'll just have to wait and see if it could actually do it. Tomorrow, I'm thinking it's going to try to get to about 214 to 215. I don't know if it's going to break that. That's a very important level to watch for. If the market keeps ripping or if Tesla gets the rip, then this thing could actually get to 220. And if it breaks that, then we have other key levels like 225. Let's just wait and see how it reacts to 215 first. Right now, I mean, it looks surprisingly strong. Now, I also want to note that the dollar index is coming down just a little bit. It's actually trading sideways, but we did get a daily breakout. It's not enough to actually cause the markets to crash, at least as of right now, but there is still an advantage for the bears because of this. Now, if it continues to just chop back and forth, I don't see it affecting the market too much. We're still just going to have to wait and see if it could get a break above 104. If it does, that could slow the markets down a lot more. The VIX came down a little lower than I expected. We're actually back in this falling wedge. We came right back there. If it does continue to come down now, it has to try to bounce off of this. If it fails, we're likely going to continue to trade sideways. Anyways, thank you all for listening. Have a great day. The market to the moon because the long-term future is still very bright. And peace out.